Okay, good morning. We are going to, Brian, we are going to do Chapter 4 today. Chapter 4 is, we're going out of order. Chapter 4 is about internal controls largely. And it's a very short chapter, so we're going to do Chapter 4 today, and then we will be starting Chapter 3 on Thursday. Chapter 3 is a very long chapter, so just a couple of reminders before we get started. If you are an accounting major or think you might be interested, Accounting Association meets Thursdays at 5 p.m. in room 215, right? Yes. Okay. And it is a great organization to join if you're looking to meet other accounting majors. If you don't know other accounting majors, this is a great organization to get involved with. As I said, we're doing Chapter 4 today, and we're starting Chapter 3 on Thursday. Chapter 3 is a very long chapter. That's why we're doing Chapter 3 on Thursday and next week. This Thursday, I will also be talking about our exam, so that will be on there. I also have posted exam information on Blackboard. Depending on what section you're in, that's what shows for you. So we'll talk about the exam. The exam is February 18th through 20th. If you're in sections 5 or 6, you need to think about it earlier than everyone else. You have to schedule at least 72 hours in advance, which shouldn't be a big deal. What to do this week: attendance quiz 8 becomes available Thursday. It's over class this week. Chapter 4 homework. Chapter 4 homework, probably one of the lightest chapters this semester, but that said, know that Chapter 3 is going to be pretty lengthy, so I would encourage you to work on some of Chapter 3 this weekend as well, even though Chapter 3 is not due. And then the video quiz 9 covers Chapter 3, and that's due Sunday. So we're going to start Chapter 3 on Thursday before you've watched the video quizzes, but that's fine. That'll work. Okay, tutoring. Today we have tutoring from 12:30 to 1:30, 1:30 to 2:30. We have a couple sessions tomorrow morning and a couple sessions Thursday. I want to put a plug in for, as of right now, we have no one scheduled at 1:30. Haley she checked last night. No one was scheduled at 1:30. So if you would like private tutoring, there's a very good chance you could have Haley for an hour. So that's at 1:30 today. You would click on, if you are going to go into announcements and click on the tutoring sign up link. And there's information there too about where it is. But we have tutoring Tuesday, Wednesday, and Thursday each week, and generally those times are the same, but we do send out a sign up ahead of time. Okay. So that said, we're going to start with just kind of a review of what we did last week, just a question to start. So first thing we're going to look at, just to refresh journal entries, because we're going to see journal entries all semester. So let's say we have a company that pays $500 on account. What's the journal entry? So when we think about what's going on here, we pay $500 on account. When we pay money, that means we're paying cash. We had the debit credit handout last week. If you need to grab that or can't locate it, it is on the home page of Blackboard. But if we go through the steps, we say what's one account involved here. And the one account I'm going to pick here is cash. That's always a nice one to start with. So I start with that's cash. What kind of account is cash? Cash is an asset. What's happening to cash? If Bourne Company pays cash, that means that they're decreasing cash. So then moving down to the next step on that debit credit handout from last week, if we're decreasing an asset, we would credit cash. So we would credit cash here. And then the other side, we'd need to debit $500 for something. And the debit here is when we say on account. On account means it has to be accounts receivable or accounts payable. If we're paying on account, that means we're paying off something we owe. So we're paying on accounts payable. So the journal entry here is we're going to debit accounts payable. We want to reduce that liability, and we want to credit cash. So that's what's going on with that journal entry. Whenever you see paid on account, that is the journal entry. This is one of those journal entries that's going to come in handy over and over. The 8,000 was a copy and paste job gone bad, sorry. Yeah, okay, so I didn't even notice that. Okay, so it should be 500 and 500. And through the magic of, whoopsie, here. Okay, there. Sorry about that. Okay, so $500 debit to accounts payable, credit, cash for 500. Okay, now on to this chapter. In this chapter we're talking a lot about internal controls and a company being able to safeguard its assets. This system of internal controls, one of the main purposes is to make sure that we protect what's ours. So things don't walk out the door, people don't steal things, people do things, record things correctly. So this whole system of internal control, bottom line is that management is responsible for it. Management has ultimate control for the system of internal controls. Management cannot abdicate the responsibility to anyone else. Management can't make auditors responsible for it. They're not responsible for it. Ultimately, it is company management that's responsible for maintaining a system of internal controls. So next up, we do have a question, and then we're going to touch on the objectives of internal control. Okay, so this is one, kind of testing your reading here. The type of fraud committed by employees of an entity who steal money from the company and cover it up through erroneous entries in the books is called what? Misappropriation of assets, fraudulent financial reporting, embezzlement, or collusion, and you can use the polling feature. Okay, so what do you think? Pick one. B, okay. What do you think? B, A, okay. B, B, A, B, B, okay. So I've got predominantly B's, but a fair number of A's. What do you have?
I've got 2 B's, 14 C's, and 11 A's.
So 22 B's, 14 C's, and 11 A's. And the answer is the A's have it. You are correct. It is misappropriation of assets. Okay, misappropriation of assets is the term. Let's talk about why it's not fraudulent financial reporting. Did you have a question? Okay, okay. Fraudulent financial reporting, simply you're not stealing anything, you're just changing things in the way you record things. So fraudulent financial reporting, the underlying activities are not changing, you're not stealing money, you're recording things wrong. Here we have employees of an entity stealing money, so that goes beyond fraudulent financial reporting. It's misappropriation of assets. Embezzlement is not the term we're using, it is misappropriation of assets. Okay, so objectives of internal controls. These would have been, these are in your book. They are subheadings. There is a section of your book called Objectives of Internal Control, and I just wanted to touch on those, that when we talk about internal control, what's it for? The one that I always think of right off the bat is safeguard assets. Brian, you can send it directly from tools. You can copy and paste it. Okay. The one I always think of, safeguard assets, you will be able to, safeguard assets means that you're locking things up, for example, where you're not allowing them to walk out the door. That's why we put locks on doors. That's why we have passwords. That's why we control access to things. Internal control also encourages employees to follow policy. We want to promote operational efficiency. A lot of times we have processes in place so that things are efficient. Internal control to ensure accurate, reliable records, and to comply with legal requirements. Okay, those are the main objectives of internal control. Those are good. I would put those off to the side somewhere on my sheet that I was making for the exam. Those are fairly good to know. That's why we want to have internal control. Internal control does not guarantee a profit. It just simply, the biggie is safeguard our assets, but the other things are important as well. Okay. So then internal control. If internal control is weak, bad things can happen. We've got a couple homework problems. Again, this homework is going to go pretty quickly. Exercise 416A. We have two situations, and you have to identify the internal control weaknesses. So the first situation, situation A, John Munson works as a security guard at Valid Parking in Denver. Munson has a master key to cash box where customers pay for parking. So he has the cash box key. Every night, Munson prepares the cash reports that shows the number of cars that parked on the lot and the day's cash receipts. And so so think about this. He has access to the cash box, right? So he's at the parking lot, and he has this piece of paper where he has to record how many cars went in, and he's got cash. So I think it's pretty, you can see what might happen here. Because he has control of the cash and recording, he could easily take even half the money and just record half the cars. So the problem with this is he has control of the cash and does the record keeping. So he can falsify his report and take some of the cash. And so the problem here is he should not have access to cash, period. And that would be locked, somebody else would come collect it, or there should be some independent way to verify how many cars were in there. This is why cashiers that have cash registers, they have cash in there, they don't have access to that internal tape, or they shouldn't, because that's an independent check of what's going on. So that's the first situation. The weakness is he has control of the cash box and he prepares the cash report. So then part B, the next situation down, Okay, Elise Fulton is the purchasing agent for Milton Sports Equipment. Fulton prepares purchase orders based on requests from division managers. She faxes the purchase order to suppliers who then ship the goods to Milton. Milton receives each shipment, checks it for agreement with the purchase order and related invoice, then sends the goods off to the managers, sends the receiving report and invoice to the accounting department for payment. The internal control weakness here is that she's placing the orders and receiving the shipments. Those are the two big things. And then she has these items shipped to the location. There's nothing, and she approves the invoice. There's nothing to prevent her here from ordering stuff for herself, receiving it, and then shipping it off to her house or wherever, or keeping it. There's no process built in here. So she could add things to the purchase order, have extra items shipped to a location. She checks the incoming shipment, so there's nothing. So she could order an extra 5 items that somebody ordered, have them shipped to herself, and then just approve the invoice for payment. And the branch is going to say, well, yeah, we ordered that. So there's a problem here when you're approving and receiving, because then you can do, you can steal items that way. Okay, so that's it with those two. These exercises are going to go quite rapidly in the homework. The next homework problem is another one that's very, very quick. So what we've got here is we have cash payment scenario. We have 2 scenarios for cash payments, and we have 2 scenarios for cash receipts. What we need to do with cash payments first is we read the 2, and then we decide which one has the stronger internal controls. I'm going to let you guys vote on them. So there's 2 choices for cash payments. So remember, you're going to pick which one has the stronger internal controls. Tom Mick construction policy calls for construction supervisors to request the equipment needed for their jobs. The home office then purchases the equipment and has it shipped to the construction site. Okay, so that's one scenario. The second scenario is Query Incorporated policy calls for project supervisors to purchase the equipment needed for jobs. The supervisors then submit the paid receipts to the home office for reimbursement. The policy enables supervisors to get the equipment quickly and keep construction jobs moving. So which one has stronger controls? Select A if you think A is stronger internal controls, or select B if B has stronger internal controls. This is not true, false. Yeah. Oh, so it would be yes. Yes is A, B is, or you can't do multiple choice with 2 choices? Okay. Yes. Okay. Do you have an opinion? A? Mm-hmm. Okay. Okay. What about you? Do you have an opinion? A? Okay. Do you have an opinion? A? Okay. A? What do you think? B. Okay. Okay, so we've got a whole bunch of A's and a B. What about you, Brian? Whole bunch of A's. Okay, and the answer is indeed A. A is better because the construction supervisors request equipment, the home office purchases it and ships it to the construction site. So they have purchase approval from elsewhere. They purchase it and have it shipped to the construction site. So there's some controls built in because we've got someone else involved in the purchasing, and the home office doesn't order it and have it shipped to them. They have it shipped to the construction site. So in B, the problem with B is supervisors can just go buy anything and submit receipts for reimbursement. There's no check on how much they bought, what they bought. There's no approval process. Certainly if we need something small, they probably do that, but otherwise A is much stronger internal control. Okay, then we have a set of, yes?
They can choose not to research the project supervisor, so take their time. It's not big difference between them.
Well, first of all, the situation, the question was let me paraphrase what you just said so people online can hear you. The question was, with the second situation, they were submitting receipts for reimbursement. By the time someone's bought it, they can falsify the receipt. There is no independent check on what they bought. They can submit any receipt. What if they went out and bought a saw for your own personal use? Then you just submit the receipt and say, I used this on the job. Remember, internal control systems are also to promote efficiency. And a lot of times we have a central purchasing place that will get us a cheaper price than just running out to buy it somewhere. The problem with B is you've got people running rampant buying whatever they want. Yeah, and that's typically that's why you don't. Now, if you're talking about a hammer or something small, probably that's going to be fine. But we're talking about you need a big table saw, costing thousands of dollars. You don't want someone just running out because, yeah. Okay. So in the next set of situations with cash receipts, again, we're looking at which one has stronger internal controls. This situation, the first one, situation A, at Colt Auto Parts, cash received by mail goes straight to the accountant who debits cash and credits accounts receivable to record the collections from customers. The Colt accountant then deposits the cash in the bank. So that's situation A. Situation B, cash received by mail at the clinic goes to the mailroom where a mail clerk opens the envelopes and totals the cash receipts for the day. The mail clerk forwards customer checks to the cashier for deposit and forwards the remittance advices to the accounting department for posting. What do you think? Okay, so we're sending, let's talk about this. So you're the accountant. Okay, I give you cash. You get cash in the mail, okay? So then you've got the general ledger here. So you write down the cash you got, and then you put the cash in the bank. Does anyone else touch cash or make any entries there? No. No. So what's your answer? B. Yes. Okay, so the problem with A, classic problem, you never want to have the same person handling cash as writes the entries and verifies everything. The problem with A, you get cash. There was a situation out in California similar to this, and the cashier ended up getting hundreds of thousands of dollars. And what she did is she would get cash customer payments by mail. So she would get the payments. So what she did, the very first day she did this, is she got the payments and she pocketed some of the money. So, but she kept track. She had a second set of books. So then on day 2, so she deposits the rest of the money that she's not crediting to customer accounts. So day 2 comes and she gets more payments in the mail. So now she uses some of those payments to credit the people from the day before to put it on their account. So then she shorts some people today and she takes some more. So every day she takes a little bit more cash, but she makes it up on the day before. So at any given time, if someone calls in, their account, chances are their account's current. If it's not current, she can say, we post those a day later. And nobody's going to complain that their account was posted to a day later, that you just figure that's processing. It is always an absolute no-no to have cash and recording being done by the same person. The situation in B, first of all, cash is always challenging because cash is so easily stolen. So at least in situation B, you have somebody opening envelopes and totaling the cash receipts for the day. Then we have the checks going one place and the remittance advice going somewhere else for recording. So the stronger internal controls in this situation is the situation B. Okay, now, so situation B, stronger. In small businesses, internal control is always more challenging just because you have fewer people to get involved. But rule of thumb is you want to separate receiving goods from paying for goods, and you want to separate cash from recording. So we're going to leave that topic and go on to probably the topic that's going to take up most of the rest of the day. This next topic, we're going to do bank reconciliations. Bank reconciliations, yes? Go ahead. Yes, the mail clerk could illegally take money and say that it's not there, and that's why cash is problematic, but the mail clerk doesn't have any way to record it on customer accounts. So yes, you can always steal money, but what's going to happen is if you take the money and you don't have record keeping for it, so if you take that money, you're going to have to destroy their invoice, their remittance advice. You know how when we send payments in with checks, you send in your check and there's a little remittance advice that goes with it where you fill out you have your account number on it and your name on it. So when you send that in, the check goes one place and the remittance advice goes somewhere else. Okay? So if you're handling this yourself, if you're doing record keeping and the depositing checks yourself and you want to steal money, you take the cash, but you have to make the entry to the customer account somehow. Otherwise, the customer is going to be calling saying, I paid that, here's my canceled check, and that's when you'll be discovered. But if the person is recording, they can make those entries and, like tomorrow, credit your account and short someone else, and then so that's where it ultimately catches up with you. Yeah. Okay. Okay, what I've got on the screen here is one of the most important things you can put on your exam sheet. You will need this. We're going to use it over and over. A bank reconciliation is another form of internal control. It allows us to check that we've recorded everything correctly to our cash account, that we've gotten all the cash in the bank that we thought we had. And this is a very, very useful form. We're going to use it over and over in here. You'll use it on the homework, and again, you're going to use it on the exam as well. Okay, so on the left side you have the bank balance. You start with the bank balance. You're going to make certain adjustments to it. And then on the right side we start with the book balance, make certain adjustments. Okay, so bank reconciliation. The purpose of the bank reconciliation is to prove your cash balance. Cash is a unique account in that we have a somewhat independent verification of what's in our general ledger cash account, what we've recorded, because the bank sends us a bank statement. So we get this bank statement and we look at the balance on the bank statement, and if you've ever done your own checking account, Typically, the bank statement balance doesn't match what you have because there's adjustments. Starting with the bank balance. So we have a bank balance. What could be missing on the bank balance? There could be deposits in transit missing. For example, you go into a bank and you always see those signs that say transactions received after 4 p.m. today will be credited tomorrow. And remember, banks are backwards, so they'll credit your account for an increase. So deposits in transit just mean that our deposit, we deposited it after the cutoff day, the cutoff time for their system. Outstanding checks, we've written a check and the person hasn't cashed it yet. And then we would add or subtract any bank errors, and that's going to be totally situational. I don't know ahead of time if our bank errors are going to be added or subtracted. It depends on the error. And then we get an adjusted bank balance. So that adjusted balance at the bottom, that's our true cash figure. Then over on the right-hand side, we start with our book balance. This is the balance we have on our general ledger. This is what cash we have recorded. Now what we need to do to that is we need to add any collections the bank has made on our behalf. A lot of times, and this goes back to when we paid bills more by check, but a lot of times companies, you would pay a company, you mail your check in to a P.O. box, and the P.O. box would be in Chicago or wherever, and companies would have banks all over the country collecting payments for them because they could reduce the amount of float. They could get your payment faster, and by getting your payment faster they could earn interest, and this is back when interest rates were higher than they are currently. So banks would do collections, and that still happens to some extent. So the bank may have collections we don't have yet recorded. We also can earn interest revenue on our accounts. That would not be on our books yet, so we'd have to record it. Electronic funds receipts, that's where the bank has gotten a wire transfer or an electronic funds transfer for us. We need to subtract from our books any bank service charges. NSF checks, non-sufficient funds checks. Non-sufficient check funds are when we have, for example, a customer writes us a check to pay. So we take the check, we apply it to the customer's account, and we put it in our bank account, and it's a part of our deposit. Then sometime later, the bank processes it through the Federal Reserve System, and the Fed kicks it out and says this person doesn't have enough money in their account. So the check bounces. So what happens then is our account, our bank account, they subtract the check from our bank account. So now we need to subtract it from our book balance again. Typically if we get a bad check from a customer, we're going to reduce cash and we're going to increase accounts receivable, because just because the customer gave us a bad check doesn't mean they don't owe us the money now. Now we have to say they do owe us money. And then EFT, if we've made electronic payments and we don't have them recorded, we would record them. And then we'll add or subtract collection of book errors. Something to note, we write journal entries typically for the items on the right-hand side. Okay? Those need book adjustments, meaning we need to get these into our book some way. The book balance column is where we're going to be writing journal entries. The left-hand side, the bank balance side, those are timing errors. There is timing. We have a deposit in transit. The bank is going to get it. It's just not on this statement. The outstanding checks, the bank is going to record them. They just haven't gotten them yet. And then bank correction of errors, we'll be calling the bank. They'll be making the correction. So on the left-hand side, the bank adjustments are time-lagged adjustments. On the right-hand side, the book balance, those are need to have journal entries written. Okay, so what we're going to do now is we're going to use that bank reconciliation form. We're going to do a homework problem, exercise 4-8. Okay, now 4-8 gives us a lot of information, and then what I'm putting on the bottom part of the screen is the bank reconciliation form. Now I've removed some lines from the bank reconciliation form because we don't need them on this particular problem, and then that way I could get it all to fit on the screen. Okay, so you don't see everything on here, but it is the same basic form you just had. Okay, so it tells us, so it's just kind of dissecting what we have. The cash account of Rampart Corporation reported a balance of $25.40 at October 31st. Okay, the cash account, that means that's the book balance is what that is. And then we have a bunch of facts given to us and we need to prepare a bank reconciliation. So what I'm going to do is I'm going to go item by item. And the first item, the 2540, that is, we report a balance of 2540. That is our book balance. So we're going to put it in the book balance column. Okay, so we're just going to walk through this number by number and fill out our bank reconciliation. Okay, so book balance 2540. I'll be sending out instructions, by the way, how to use StudyPlan. You don't need to worry about StudyPlan today. I'll be telling you how to use it. StudyPlan is a great exam review tool, but there's a particular way to use it. I just saw something go by in the chat window that I don't read. Don't do the math review. That's not even, I don't know why that's popping up. I can't control what pops up, but I'll be sending you a little email about how to use StudyPlan for the exam. Okay, so next number down, included were outstanding checks totaling $900. So outstanding checks are going to be subtracted from the bank balance. So remember, all I'm doing is I'm going through, I'm combing through the numbers and putting them where they belong. And it's probably, for me, it's better if I just go through and pick each number out and put it where it goes in the form. And that's why the form is really useful, because you can just go through and determine each number by number so you don't forget something. Okay, so outstanding checks, deduction of $900, I'm putting brackets around it because outstanding checks get deducted from the bank balance because they're checks that the bank has not processed yet. Okay, next item then is the October 31st deposit of $400. A deposit of $400 that did not appear on the bank statement is going to be a deposit in transit. And we're going to add that to the bank balance. Okay, so we add a deposit in transit to the bank balance. Okay, so continuing on, the next sentence says the bank statement, which came from TriBank, listed an October 31st balance of $36.75. $36.75, that's the bank statement balance. So we're going to pop that down under bank balance. Bank balance is $36.75. Okay, included in the bank balance was an October 30th collection of $670 on account from a customer who pays the bank directly. So that next item, $670 on account from a customer who pays the bank directly, that's going to be added to our book balance. Okay, continuing reading, the bank statement also shows a $30 service charge. Is that next item coming up here? And that service charge is going to be deducted from the book balance side. So we're going to subtract the $30 service charge. So we're going to see a deduction under service charge on book balance for $30. Here we go. Okay, so subtract service charge. Next item over is $20 of interest revenue that they earned on their book on the bank balance. So that interest revenue, now we switch sides here because interest revenue represents an increase in our cash. So we're going to add interest revenue to the book balance. Okay, and then the last adjustment here, an NSF check. An NSF check is going to be subtracted from the book balance because they're deducting it. It's no good, so we need to subtract it from our book balance as well. So then your next step, so now we've got everything recorded, everything's on there. Our next step is to figure out the balance on each side. So on the bank statement side, the bank balance, the left column, we're going to take $36.75, add the $400 deposit in transit, subtract $900 outstanding checks, and I get $3,175 as my bank balance. And then my book balance column, I do the same thing. I add my book balance of $25.40, add bank collection of $670, add my interest revenue of $20, subtract the $30 and the $25, and I get $31.75. Okay, when we've done our bank statement, it's said to be in balance when the bank balance, the adjusted bank balance equals the adjusted book balance, which is what we have here. The bank statement balances. Every bank statement will ultimately balance. Sometimes it's really frustrating to find the differences, but it will balance. And when it asks you, the last sentence of this exercise says, prepare a bank reconciliation to determine how much cash they actually have on October 31st. They actually have $3,175. Your adjusted balance on both the bank and the books is the same, and that's their actual cash. Now again, remember on the bank balance side, those are timing errors. Time lags account for the adjustments on the bank balance side. On the book balance side, the book balance you have to write the journal entries for. The adjusted balance on the bank side has to equal the adjusted balance on the book side. There is, if they don't, you've done something wrong. They will absolutely have to equal your bank statements in balance. Okay, so that one's that on that exercise. Okay. Okay, so another homework exercise, and this one's really quick. The next one is short exercise 410. There are no computations. Okay, so on 410 what they've done is they've given you a bank reconciliation, and it says at the bottom, well, it tells us that Brenda Small manages this company. Small fears that an employee has been stealing from the company. This employee receives cash from clients and also prepares the monthly bank rec. So she does her own independent bank rec, and the question is, does it appear that the employee has stolen from the company? If so, how much? Which side of the bank reconciliation shows the company's true cash balance? Okay, the answer here, the adjusted bank balance does not equal the adjusted book balance. That means this is not in balance. Because they aren't in balance, something's wrong. It does appear the employee has been stealing cash. The bank balance, the adjusted bank balance, is the accurate cash balance. That's kind of like an independent party. They say we have $3,690 after adjustment. Our books say $4,400. That employee has stolen, it appears that employee has stolen the difference between there. So to answer the question about if so, how much, you take the difference between the book balance and the bank balance, the adjusted book balance and the adjusted bank balance. So that's just one of those things you look at. It doesn't balance. That means there is a major problem. They actually will have to make an adjustment to do the bank, to finish the bank reconciliation. They're going to actually have to do an adjustment for the amount stolen, and that would go on the book side. So the true balance would be the adjusted bank balance side. Okay. And that's it on that exercise, so that one goes very, very quickly. Okay, true-false question. Okay, every adjustment on the bank side of the bank reconciliation needs to be recorded in the books. True or false? What do you think? False. 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 I have a preponderance of falses. What do you have, Brian? Yes. You have a preponderance of truths. 90 truths? Did you reset from the last one?
I don't think.
Okay.
No, what it was. 9 truths. It's half and half.
You're half and half. Well, we have this as actually false. Okay, it is actually false because if we have adjustment on the bank side, those are timing errors. Those are time lags. That's where those are coming from. We don't record those in the books. It's the adjustments on the book side that get recorded in the books. Okay, next up, we're going to do a homework problem, exercise 419A, and we have 7 items here. And each of these items you have to classify as A, in addition to the bank balance, B, subtraction from the bank balance, C, in addition to the book balance, or D, a subtraction from the book balance. So what I'm going to do is I'm going to assign these to people, and then I'm going to come back and ask you. So I'm going to tell you what number you get. Okay, these are easy. You write down the bank reconciliation, right? So you'll get A, or 1. You'll get 1, 2, 3, you get 4, 5, 6, and then you're going to get 7. Okay? So we're going to wait a minute. So figure out yours, and I'll be back in a minute. Did you get your first one? Okay, so yeah, number 1, service charge. It is D. I'm waiting to see. I don't know if these will show up from my clicker from here. Can you see if it's showing up on my screen? Okay, so it does reach. Okay, so number 1 is D. It'll catch up with us. Okay, number 2, book error, we debited cash for 100. Okay, so a book error, let's think about this. We made a mistake on our books. Are we going to call the bank to say fix it?
Oh, no.
No. You had the right idea, but the books, C, yeah, okay, yeah. So number 2 is C, because we are going to add it to the book balance, but it's going to be our book side. Okay. Okay, so 2 is C. Okay, 3, an NSF check. Okay, an NSF check the bank has already deducted. D, yes. Okay. And again, if you look at that bank reconciliation form, you see which column they're in, and then if you add or subtract them. So 3 is also going to be D. Okay, so 4. What do you say for 4? 4C, bank collection of a note receivable on our behalf. That is absolutely right. So 4 is C. How about 5, deposit in transit? A, yes, 5 is A. And again, looking at our bank reconciliation, that's going to be where we see that. Okay, now I would say you lucked out. This is the hardest one. So what do you think for 6? Bank error. The bank credited our account for a deposit made by another bank account. B. I'm going to go with B. Oh wait, what are you doing? Number 5? No, you're doing number 6, right? Yeah. What letter is that one on? Did it move?
Yep.
Okay. Number 6. Let's talk through 6. Okay. So 6 is B. It's going to be B because we have a bank error. The bank credited our account for a deposit made by another bank customer. So what happened is the bank gave us money that was someone else's. So the bank is going to find this error because the other person's going to complain. So the bank is going to need to take money out of our account. So this is going to be a deduction on the bank side. Okay? Okay. And then finally, for 7, outstanding checks? B. Yes, absolutely, yes. It'll show up there. Okay. So what we're going to do now is Brian is going to take over and talk. I'm going to switch PowerPoint shows. You want to start talking while I'm switching?
Sure.
Hold on.
Cool. Well, hello everyone. I am Brian, your GA. So for you people online, that one. For you people online, I'm the person chatting with you. So yay for me. Okay, so I'm going to be talking to you a bit about the accounting profession. I got you. Unfortunately, the lag in time is terribly unfortunate. That's my name. Oh, I'm the ambassador for the Ohio Society of CPAs. So, there's a lot of pictures on this one. Okay, so a little bit of background about myself. I graduated from Jackson High School in 2009. I went directly from Jackson to Kent State Stark. I did post-secondary while I was in high school, so I already had a couple classes under my belt, and I just decided to go to Stark. I did all of my classes down there, all my undergrad, or 2 years of my undergrad classes down there, financial and managerial down there. I have a job with Chuny and Finicki when I graduate. I did an internship there, and I'll start there in September after I get my CPA. So, okay, so a lot of people don't know exactly what accountants do. A lot of people think they just sit in an office and, you know, crunch numbers. And so I've listed a bunch of jobs that are available to accountants. You could do public accounting, which is mostly tax or audit services. If you don't know much about those, come to BAP meetings and they'll explain all of those, or everything you can do with accounting. There's also business and industry. You can be a financial analyst. You can do internal controls, like what we're learning about right now, cost analysis, and there's a load of different things. There's also, you could go into government. You can go into governmental audit, so you'd be auditing like cities, states, stuff like that. You could be an FBI agent or an IRS agent. Those are both, you know, heavily recruiting accountants right now. It's okay. Yeah, and then there was other things there too. Yeah. No, they can't. I should stop reading the chat room. Okay, so some helpful skills to have when you're going into being an accounting major. You should have good written and verbal communication skills, good computer skills, you'll be working with computers all the time, good technical skills. Obviously, you should know how to do accounting if you're going to be an accountant. You should have good teamwork skills, time management, leadership, and you should be detail-oriented. A good way to get leadership skills is to do Beta Alpha Psi too. So, Beta Alpha Psi, good thing. I've got a slide actually for it, so I'll just keep harping on that. Okay, so the CPA exam is very important to accountants. If you're going to be an accountant and you want to work in public accounting, or the industry it doesn't require it, but it would definitely be a good idea. So some requirements to take the CPA exam in Ohio. You need 150 semester credit hours, and that can include any of the accounting classes that you take. So you have to have 30 hours of accounting classes, beyond 24 beyond this class, or this class in managerial, and then you have to have 24 other hours in business, and then you can have any other kind of classes just up to 150 credit hours. Now, a lot of people decide to do double majors and get it done in like 4.5 years. A lot of people I knew double majored in accounting and finance. Also, what I'm doing, I'm in the master's program. That's the recommended path because the master's program will prepare you very well for taking the CPA exam. So I will graduate in May, and then I'll take the CPA exam, hopefully in May, but there's complications. We might not be able to take it until we get our transcripts, and our transcripts take a little bit to get. So you should also have an undergraduate degree if you're going to take the CPA exam. The CPA exam is important because it denotes a high quality knowledge in the accounting profession. You have to know a lot about accounting to pass that thing, so it's very important. Also, you can't progress in public accounting until you have your CPA. So if you want to be a manager in a public accounting firm, you have to have your CPA or they won't promote you. There's a lot of monetary benefits to that as well. Obviously, if you're getting promoted to manager of a public accounting firm. Okay, so what you should do: summer leadership programs, internships, full-time employment. Yeah. So do summer leadership programs in the year of probably your sophomore summer. So this summer, start looking into leadership programs. Beta Alpha Psi, again, free pizza and pop every Thursday, room 215 of the Business Administration building here at 5 o'clock on Thursdays. Get involved. There's a lot of office positions. Also, there's I'm holding office hours kind of things on Wednesdays from 2 to 4 in the BAP office, which is room 579. If you want to get in contact with me, my email address is on the last slide. Basically what I'll be doing there is just holding information sessions. If you guys want to come talk to me about anything to do with accounting, any of your classes, if you want to major in accounting or careers, come talk to me and I'd be more than happy to talk to you. I've got a bunch of information and stuff. Oh, and if you want a cool pen with a highlighter on the back of it, you have to come see me in those office hours. And they're really cool pens. I've got a lot of crap down here that you guys could pick up, or if you're online, you can just come to the office hours and I can give you this stuff.